Hello guys, this is the first video of the course that I promised to give you on this channel. It's all about smart money concepts and trying to erase some wrong ideology that has been peddling around in the forex market. So if this sounds good to you, make sure you stay to the end, like this video if you are new, and subscribe. Today's video, we are going to look at market structure because this is one of the most important lessons you need to understand as a forex trader. If you are a beginner, intermediate or advanced trader, you are going to pick out something valuable from what I'm going to share with you today. Market structure is simply understanding what the market is doing in terms of movement. Is the market moving up? That is bullish structure. Or is the market moving down? That is bearish structure. And also, if the market is moving sideways. In that case, we have a sideways moving market and the market consolidates. Each of these is a strong indication of price action. It's going to tell you what price is doing currently. For example, if market is trending upward, it tells you that the price action here is bullish, that market wants to what? To trade upward and respect the lows, the key lows in this structure. Same thing with a bearish market. The market is respecting the highs, okay? And we do not want any of these highs to be violated. Now, when it comes to a sideways moving market, it tells us more we need to know. This could be the beginning of either a bullish trend or a bearish trend, because this consolidation here simply means that the market is indecisive, meaning orders are being built up, providing liquidity to be taken in order to move in either the bullish side or the bearish side. So all of this is what I will talk about in this course. But today we are going to look at basic market structure. Now, in the basic market structure, we have the point here. We have an high, we have a higher low, higher high, higher lows, and the rest. These are the textbook definition. But as you all know, the market do not just print like this, no. Instead, the market print out something like this for a bearish market and something like this for a bullish market. Now, let's look at this. In a bearish market, I want you to always look at two areas on the chart. But before I get there, let me just explain this. You can see here market moved down, went up, came back down, took out this high. Now, most people here will say this is chalk and they look for buy in here. But what happened? Market push up a little and then take them out. Chalk is not everything. You have to include chalk in your overall reasoning or logic of a particular instrument. So don't just be trading chalk each time you see it. Because in this case, price created a chalk here. Most beginner traders or traders that are less informed will look for trade in here for a buy. But what happened? Price push up a little and then break. Creating what? A lower low. This is a lower high. This is a lower low. Now, once this lower low is created, we expect a pullback. In this case, price move up, came back down, moved to this 50% level here, came back down, decided to move deep, and then create a chalk. Price move again, and then decided to break that previous low, creating what? A lower low here. So we have a bearish structure played out here. We have a lower high, we have a lower low, we have here a lower high because it's lower than this. This is a lower low because it's lower than this. So if you don't understand the terminologies, that's what it means. This is a lower high. This high is greater than this. So this is a lower high. And then this low is a lower low because it's lower than this, and so on. And then we have a bearish structure forming. When we have a break of structure, there are two things I want you to be looking at. What is the, in this case, we have a downward push. What is the supply that took out this demand? Because this is demand, push price up. Very important. We need this to be taken. Now, you ask yourself two things. What is the supply in this case that took out this demand? And also the point of origin. So that means 2 points of interest are key whenever you have a valid break of structure. When you have a valid break of structure, 2 things are important. So the point of interest here are simply the flip zone. That means that area that took out this low, and the origin. By so doing, these are the high probability zones you can look for a short trade. Take note of that. 2 things. Now, you don't trade market structure if you don't understand mitigation. Mitigation is simply price moving back to the opening price. The opening price that started this move, maybe this was the opening price here, and the rest here is a wick. This is the opening price of the candle, the bearish candle that started it. If price do not tap into this, we don't have mitigation. Most people say that the entire supply zone, for example here, if price tap in there, then that is mitigation. I said no. Price must tap into the opening price for full and true mitigation. If price fails to tap into this, just like this for example, it means it's an inducement. So a high that fails to mitigate is simply an inducement. Now the question is, why do we need to trade there? We need to trade there because supply came in to take out this low, and we are looking at the situation whereby price may continue moving lower from there. And also we need to mitigate that move that started it. The bearish candle that started this move needs to be mitigated, meaning the opening price must be traded into. And then we expect price to move lower. Now sometimes market structure do not move to break structure from here. Instead, it might seek deeper pricing, meaning it has to trade back to the origin. And these have a higher percentage than this in that instance. And from here, you can see we broke structure. Now, this move upward here, most people will call this a change of order flow. They call this a chalk. Okay, because price has traded above this, they call it a chalk. No, we don't have change of order flow yet until we violate the leg that pushed this down, the origin. If we have a close above this origin, then we have a change of market structure. That's why most people fail using smart money concept, because they don't understand this simple premise. Any small thing, they call it the chalk, and they start looking for buy opportunity in here to take the price to the upside. Whereas this is the origin. We want the origin to go. Very important. And this is what I teach my students most times. Wait for price to break out of this origin. Now, when price broke to the downside, it created a form of structure here. This is the 50% level. This is the supply that took out the demand. In this case, you can see that price didn't come back to the origin here, but move. This is just my example, because market does this each and every time. Now, a break of this, you mark out your 2 levels that are of high importance, and these are the areas you can trade in. If price take out this and come into this region here, this point of interest here, though it's in premium for a sell, I will not consider it a great point of interest. If I'm trading this, I might be looking for serious confirmation to show me that price is willing to go lower, or I might look for an opening price within this point of interest to trade up from. So price may come in here and then move to the downside. But I want you to start looking at these 2 points of interest first as a beginner. Okay? And you make sure you backtest this concept here. The flip and the origin. Those are the 2 points of interest. When you see break of structure, look for the flip, look for the origin, and then plan your trade around those areas. Now, for a change in market structure, this is the move that created this level. So this is the new origin. Now, if price move up and close above this, yeah, does this signal a change of market structure? We want the origin to go. Okay, we want the origin to go. This may happen. Price comes back down. Most people look for buy. But what happens? Price tap into this origin and then continue going lower. That's what I want you to look at. Because the origin will invalidate the structure, not the flip zone. The flip zone may break structure, but price may come back into the origin and still continue that market structure. So you need to understand all of this thing. So this is for a bearish market. Let's look at that of a bullish market. In this case, we have market push up, came down here. Most people will rush and call this a chalk, and they start looking for short. No, you wait for a structure break. In this case, we have a BOS here. Where are the areas where you look for trades? The 50%, that is the flip region, the supply that took the demand. Now, what I fail to say here is you can mark out all of this from the region here. These are key areas where you can look for trades. From this top to the demand zone, in this case, that took out that supply. But for simplicity and for refinement, I will simply choose this. So you can look for trades in here. The trades in here are simply intra or scalping. And if it breaks structure, you can keep holding. Then we also have the origin. The origin is here. This is where the market started this move. We don't want this to go. If this level gets broken, then we invalidate this bullish structure. Take note of that. So we want that level to hold. And then we continue moving to the upside. Now, as you can see, this is the high that we want market to take. Not this one, not this one. This is the high that started the pullback. Now, full mitigation must have occurred in here. Let's assume that, and then we look for a break in structure. Now, when you see that break in market structure, this is the BOS. Your point of interest is the flip zone and the what? The origin. This is the origin of the move. These are areas where you look for trades. And price can either move from here or from here. So that is why I said mark this area out. When price trade back to the flip zone, in this case, this could be an order block, it could be an hidden base, whatever it is. But what I like teaching my students is just simply look for the opening price. I did a video on opening price. If you have not seen that video, check up here in the card, or I'll put a link in the description for you, and look for your trades in there. So now let's simply look at the chart for examples. Now let's look at this pounds USD daily structure. Now we have a bullish move here. This is the high that was created, and this is the origin. Alright, price moved from here and broke out this level. You ask yourself, what is the demand that came in to break out this? This is the demand here. You can mark out all of this area. And the second area you need to look at is the origin of the move here. For this major move. Now for the minor move, we have this break. This is the origin after this minor one has been taken. But we are looking at the overall market structure, the origin and the flip area. This is where demand came in to take out this high. And you can see when price came back in, and watch price mitigate the opening price, and then we moved. This is the structure we need to break to continue this bullish momentum. And as you can see, price moved from this origin here and then this demand broke this level. Not this. This is a wick. All right. We want to see a body close. Now a body close was occurred here, and this is the flip region here. You can mark out this or this area here as the flip region, or you start from here, or you start here, and you can see when price came back, this is area where you can look for trades, and also the origin from this level here. Backtest this idea in case price take out this level and start trading down. The next best area is to buy is this region. Now we have a push, so this becomes the origin of the move. Now this is the structure that was broken here. We have a break here. So this move now broke this level. We have a small structure here. In this case, the origin is here. The 50% did its job here. 50% did its job. This is the next origin. We are breaking this level. This is where we have a close above. In this case, price trade back to the 50%, the demand that took out that level. As you can see, price didn't get to the origin. There's no problem. Now the moment this level is taken, we have a new origin. Now take note of this. This level here, we have a new origin, and this is a new high. And what happens? We fail to take out that high. We fail when price move in here. We did not take that high. So why do you want price to invalidate before we see a bearish structure? We want price to close below this, and that occurred here. How you trade this is not what I'm showing you here. We are going to talk about entries. We are going to talk about change of order flow, internal structure change in order flow. And then what I want to show you is simply understanding where the market structure shift occur. Now most people will say it happened here, or we have a chalk here and so on. Yes, this is the beginning of the internal structure move, but we might have a chalk here and this place push price and then continue breaking structure. As you can see, price rejected from here again, but what happened? The price action is weak, and the moment this occur, the 50% that broke that level, the 50% that broke that level is this level here. Now if you trade this, if you are to hold it longer, you might get your loss, but don't worry, the origin is there. This is the origin of the move, and as you can see, that's where price started moving to the downside. The origin, price respect the origin, created a new market structure. In this case, market structure is now bearish, which break this level 50% here. The 50% supply broke this level. So you can see price came in, this is your trade there. Now, because price broke this, as I said in my illustration there, if price take out this high, most people will say we are back to bullish. Yeah. They start looking for bullish what? Structure. No. The market is still bearish. Why? We have not taken out the origin in this case here. This is the origin. We have not taken out the origin. As you can see, when price came back to the origin, whatever buy you plan to buy from here, stay away, because the market flow is bearish. Simple picture here, and this is the low we are targeting. If you are buying, selling from here, long term, we want to see this go. And you can see, price played a little bit, broke this level. These are key levels. The moment this level is broken, you mark out the supply zone that broke that. And as I said, you can include all of this from this low upward. But what I can see is, I see this level here. This level here. This supply zone. Price came in, tapped into this opening price, but failure to do this. And obviously, we might see in the future, I won't be trading in here because we did not mitigate this area. But the supply zone was tapped in, and then we continue the move to the downside. As you can see, you can do this several times, backtest this, and you see that what I'm showing you is the right thing. It's the right way to trade. We created a low here, the origin, the 50%, the flip zone here. In this case, the 50% was respected. Price came and pushed price down. But what happened now? Price wants to mitigate the origin. When you look at the current price action, okay, price is currently at the origin, and you can see we are expecting to trade lower. All right, we're expecting to trade lower here, maybe for a few times, because we have seen a change in market structure here. Because when this broke, we have an origin here which has been taken out. You can see here this origin here. This is the current price action now. That's why we're looking at bullish structure on pounds USD. It's broken. So there is simply for intraday setup. You can have your intraday setup. That doesn't mean price may not give you good trades, but overall we are bullish because we have closed above this key structure here, and we have started the bullish price action going forward here. We've broke structure. This is break of structure here, and probably we are looking at what, a reversal here. I mean, not a reversal, sorry. We're looking at a pullback. Where it's going to pull back to 50% level, which is here. This is 50% level, or the origin. Okay, so when price trade back in here, you can look for buy to the upside. So this is just an expo to you. Simple. So if you like what you're seeing, make sure you subscribe, make sure you like this video, share this video so you can reach as many traders as possible. And also, very soon I will create a newsletter where I'll be sending you emails every day if possible to show you some key areas of some major currency pair that I follow, and you can also join that. It's free. Joining the newsletter is free. I will include the link when I announce it. Make sure you join, subscribe with your workable email, and I'll be sending you daily nuggets when it comes to trading. And on that note, backtest all of this, and I will see you in the next video. Meantime, let's meet ourselves in here.